Ravi Chawla is the Managing Director and CEO at Gulf Oil Lubricants here to discuss their quarterly performance. It's been double-digit growth in the B2B and the industrial segment, a bit of a mixed set of numbers, but what does the quarters in store hold? Let's find out. And Mr. Chawla, let's begin by your core lube volumes because that has been high by now 9% and that's been earlier than the previous guidance. What have been the volumes for AdBlue, and just walk us through the outlook as to how you see your volumes shaping up?
Well, thank you. Yeah, so we saw that quarter two, the monsoon quarter is generally a low demand quarter, but we saw our core volumes growing well. So actually grew 8.8%, and factory fill was a bit depressed. Otherwise, most of the other segments have got good double-digit growth. So factory fill, of course, is the new vehicles, mainly commercial vehicles. So overall volumes without factory fill would have grown double-digit. So good volume growth. We are seeing good demand in terms of a monsoon quarter also where some seasonal rains were there. And AdBlue is slightly depressed. We're seeing lower consumption this quarter, though it's still at a good close to 10,000 a month kind of thing. But AdBlue slightly low. And I think we are seeing that with October and November, December, again, it does pick up. So overall, I think core volumes of lubricants was a good quarter. AdBlue slightly subdued.
Okay, fair enough. So give us a sense then as to, what the outlook is in terms of volumes for the coming quarter and whether or not you can meet that guidance of 15 to 20%.
So volumes, we normally say 2 to 3x the market growth rate. The market growth rate, what we look at is around 4%, 3 to 4%. It depends, of course, on a lot of the segments. But I think we continue to have that. So hopefully try to get that 2 to 3x range for the volume. Industry grows at 3 to 4%. So we grow 2 to 3 times. And I think we are hoping that that is going to continue. Industry is doing well. And overall, we are seeing whatever segments we are focusing on, we are getting. In fact, last quarter, we did double-digit growth in a lot of our segments like motorcycle, agriculture, even our channel OEM business for the franchisee workshops did very well. So we are seeing shoots of growth. Our industrial business is doing double-digit. So I think we continue to have that outlook and we see a lot of green shoots also coming in.
Interesting. I wanted to understand how you're feeling about the slowdown that one is seeing in car sales.
Yeah, so for us, 90% of our lubricant consumption is replacement. That means the vehicles are already on and the equipment is already in the market using lubricants. So yeah, this 10% does get impacted due to a factory fill. So I think the slowdown, we are also seeing that, certain cycles, certain segments are kind of flattening now. But I think the outlook is still positive. I think we will see that in the second half. Yes, the few months, you're right, have been slightly subdued, commercial vehicles, and we also seen cars. But I think we are also focusing on segments like SUV in the car. We are expanding our distribution in rural and urban. So obviously for us, it's a mixed bag. But yeah, it would be very good if the sales pick up and that helps to also get the future vehicle park on the ground.
Absolutely. But what about the fall in crude prices? Have you passed on any of the benefits to the consumers? And if not, can we then expect some margin expansion or uptake?
Well, there was stability on crude. You're right. Base oil is there, but we have seen some other components go up. Forex plays a role. So I think there has been steady in terms of the base oil and others. So there has been some adjustment in the schemes overall in the market, we would say. Pricing wise, of course, nothing significant is there. But yes, some adjustment does happen. And of course, our B2B business is more PVC oriented. So as of now, we're just hoping the costs are stable. We'll have to wait and see what happens to the exchange rate, of course, with the recent events that are happening. And we are hoping that a stable raw material pricing will help us to look at a margin where we have been talking 12 to 14%. It's around 13%, 12.6, 12.7 now. And we are hoping that the stable raw material prices will help us to do that. And of course, the competitiveness has to be looked in the market quarter on quarter.
Right, and your core lube volumes were up around 9% on year as well, slightly better than the earlier guidance. What is the outlook then on your volumes? Apologies for that. I just wanted to also understand what the outlook is when it comes to what your overall capex plans are down the line.
So our capex is normally 25-30 crores. It's the usual capex we do to upgrade our capacities in terms of filling lines. So that would be our capex. I think around that it varies sometimes by 5-10 crores. This year is again we are looking at, as the market is growing, we will look at some expansion in terms of filling lines, but we would be more or less around that capex for the core business.
You've also acquired stake in 3 EV-related businesses. What is the plan to increase your stake here, and what is the outlook on the majority stake in the business? Will that be something that you'd look at down the line?
Yeah, so we have 3 investments. One is investment in a DC charging company called Tyrex, where we have majority stake already. So we are working with the team there, and happy to share that they have already got around 1,500 DC chargers installed. We have done well in the first 6 months. We have done. It's a small business now, but we are nurturing it. And as we have said in the past, that the DC charger business with the buses and other requirements in the car segments are going to be quite good in the next decade. And we are looking at this business becoming substantial as we go forward. We have looked at in 5-6 years that we should be able to go more than 500 crore just in this market in India. We're also looking at export of these chargers once we get the validation on the certification. So Tyrex is a DC charger company. The other is we have an investment in a software as a service company called Electrify. There we have 26% share, and we are working with them because they provide the platform on SaaS. They are dealing with a number of OEMs, and we've also got an international investment through our parent company Gulf Oil International and from the India balance sheet, which is a company called Indra, which makes car AC chargers. So those are also products we want to bring into India. So I would say that these are some of the investments which we hope will help us to bring the AC/DC charging and the software services, and of course leverage our distribution touch points, our partnerships with OEMs, our distribution reach, and our brand. So I think that is the way we are looking at Gulf making a play in this segment.
All right. Thank you so much for joining in and giving us a sense on your volume growth as well as the demand. It will be a better H2 FY25 for CVs, and they have seen decent growth and volume so far.
If you like this video, then like, share and subscribe to ET Now.